Hello traders, Gary Wagner here, about 10:45 in Honolulu, 3:45 in New York on Monday, November 16th, 2015, and this is the Daily Report for Gold and Silver. After trading substantially higher in overseas trading last night, we do have gold currently trading in essence unchanged, actually down about $1 on the day, 1082 and change. It's seen a low of 81.57, so we're very close, just off of the low, and a high of 1098, a tad below $1,100 per ounce. So the first thing that I do want to do this morning is to take a look at the highs that we got last night. Now we're looking at a 2-hour bar chart, 120 minutes, and the way that we're separating the days here, realize that the 15th, of course, is Sunday in Hawaii, Sunday on the mainland United States, but it is Monday in Europe, and our hearts go out to those in Paris and France that really experienced such a tragedy on Friday. But coming into Sunday was the first day that anyone could really react, markets being closed on Saturday for gold, and you saw them really bid the market up, really looking at about 1084, and from there the market moves up to a high, as I said, of about 1098, just shy of 1100. The beginning of the New York market, of course, is this arrow right in here, and you can see that once we opened in New York, we had a steady decline as to where we are currently, and again, this is a Japanese average format. Now, I've just gone and converted our Japanese average to standard candlesticks, and with these 2-hour candles, something really comes out that hits me very, very squarely in the face, and that is this Three River Evening Star that we got on our 2-hour candles. Absolutely perfect star right at the apex or top of this market move. Of course, since that point, we have seen this market come down. Not that much difference when you look at the candlesticks, although you've had a couple of bars that actually had an uptick, this current one being one of them after hitting this low that we just talked about. So all in all, with all of the global geopolitical turmoil, it did appear at first that gold was acting once again as a safe haven, but that wasn't to last for any clear length of time. And as I said, we currently have gold unchanged on the day. So to look at gold without really bringing into light either the dollar or oil, which were huge influences on the precious metals today, we have to realize, first of all, we have incredible dollar strength. In fact, when we look at current trading on gold, you'll see that $6.10 has to be subtracted from gold due to a strengthening US dollar. Normal trading is providing actually $4.80 to the plus side, and so when you put those two together, that's where we're getting our negative $1.30 on the day. And of course, when we look at the dollar index is up almost 0.4%. When we look at our daily chart, you can see that on Friday, not only did we have a very, very strong dollar, that's this candle right here, but follow through today, top of the market 99.50, and that's currently where we've gotten some highs, and we're pegging our current resistance, because when we compress this chart to really look at some of the detail work and where this market has been, we have a couple of tops that we're seriously looking to take out. One at 100. We have another top on top of that at about 150. We are well above this is our support level at 98. And my sense is that we will move higher and probably test 100. 100, we could see it back off a little bit or break through. But this is a really key area that we want to look at in terms of the dollar index, if in fact it does continue to move higher, and I do suspect that it will. The other market that had an extreme turnaround this morning is crude oil, which was trading dramatically lower, down actually touching at $40 per barrel. Look at this on a daily chart, for example, and you can see that on this single candle, it is green, but take a look at the low. The low comes in right at $40 per barrel. But to really see the big picture of this market, we've got to take it down from a daily into an hourly or 2-hour chart. We'll start with the hourly, and here's where you can really see the activity and the incredible pivot that we saw, of course, once some confirmation came out that there was bombs that were set on the oil fields over in Iraq. But take a look at this. Here's the beginning, 16. So this is, in essence, Monday morning here in the mainland. They drive the market up. They drive it up to about 41.80, just above that. But from there, we have this market sell off dramatically, coming down almost $2 a barrel. This all intraday, hour by hour, then to move back up, hit this high, which comes in and roughly matches this high here before finding a little bit of backfill, so to speak, and now is currently back up near the highs at 42.07. So when you consider the price of oil moving up the way that it did, and more importantly, the dollar having such strength, that's put some real pressure on the gold market, not the precious metals complex, but the gold market, because as we look at some of the other markets, for example, silver right now is trading up nominally, call it almost unchanged, up about 2 cents at 14.25, and that really, you've got the push-pull of a negative 8 cents on silver due to a strengthening U.S. dollar and a plus 6 cents or so, and that's where we're getting our net change in that particular market in silver. If we look at platinum, platinum's up $4.80, and considering that it's really up $12.80, take away $4.80 in terms of strengthening U.S. dollar, that's where we get the net change here. And of course, finally, palladium also up dramatically, up $12 at $551.50. So traders, I've got to be upfront and honest with you. I came into the beginning of this week, Monday morning, really believing that we would probably issue some sort of a buy signal and that we would probably look for some sort of bottom activity in gold, because early in the evening or late in the evening here, again, this is coming in Sunday, as I said, we saw this market really over the entirety of Sunday trade up from these lows at about 82 up to these highs at 98, and I felt that we might be looking at a real return to safe haven buying given the geopolitical circumstances overseas. However, it couldn't last at all, and we saw this market decline. So we've still sat on the sidelines awaiting some sort of confirmation that this 1080 area, the area that we're currently just about $7 from, will provide support and will be a bottom in gold. We can't say that for a fact, and in fact, we have no technical confirmation of that. I expected it to drift back up to 1100 should there be any kind of a run, but I also thought it would stay there. It certainly has not done that. About the only thing that we did do today is on trending markets, I did issue a buy recommendation early this morning. I believe we got in at 2022, 2023. This market is really steamrolled up, and that was the only market I really saw developing all of the characteristics of a return to rally mode. Actually, quite the opposite of what we saw in gold, because if you look at this short-term work here, and let's go ahead and blow this up, but you have the 16th coming in, and as you can see, this market pretty much had a 3-river morning star variation. You've got 2 stars gap between the red and the green, but nonetheless, as I said, we got in roughly at about 22, 23, so right in here when I saw this pivotal V develop this morning, very much like the opposite of what we saw in gold, except that I fear shorting gold at 1087 or 1085 because we want to see if there's any kind of support there. But we certainly saw some solid support in the S&Ps, and that's why we sent out that signal there. We will look for any kind of potential bottom in gold and the precious metals. Right now, we're just not seeing it. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow on Tuesday for another daily update and review. Bye-bye.